Hello, everyone, and welcome back to another episode of Test, Optimize, and Scale. Joined here by Cate Diaz and Devin Ambron from Market Chemistry, one of the top names in the investment crowdfunding and fundraising space as a whole. Creative agency going into depth today about what a successful presentation looks like, an effective capital raise, fundraise consists of. From their experience, they're looked at as one of the best. I've enjoyed all my conversations, even working in the vertical, come back with new learnings from each of our discussions. So Cate, Devin, thanks for taking the time to do this. Excited to be on the pod with you.
Thanks for having me.
Great to be here. And thought we'd start with your origin story. Cate, if you wanted to kick it off and basically explain, your background, creation of Market Chemistry, and how you got involved in the space.
Sure. So in Austin, Texas, which is where I'm currently based and have been so for 11 years or so, I actually was working in startups here. I worked in marketing, operations, and senior level positions. And eventually I noticed a pattern, which was that all of the CEOs I worked under had one area where they were great, which was talking about the company in person. And then when they went to raise capital and distill all that into a deck, they really did not know how to do that. Maybe they're great about talking about technicals on paper, or maybe they're great about talking about the mission on paper. But a lot of the other areas, they would struggle to shrink down to something that was punchy and palatable at the same time. And I ended up just organically helping. Lastly, in my role as director of marketing inside of a social media startup in Austin, we did work together on, I would say, 4 decks, CEOs that I worked with over the years. The last role that I mentioned, I ended up co-writing the deck with the CEO that raised the largest seed round here in Texas at the time, which was like 2019, 2020. And off of that success, I ended up deciding that I needed to start a business of my own. And the pitch deck was the original service. It was investor narratives, pitch deck, tear sheet, etc. Those things were the core of the raises. And eventually I met Devin within that first year. And there's a third person that I met, and that was John Stid at Ridge Growth, who then got acquired by Dealmaker. So as I was working on a project with Devin where we weren't formally working together, he had an agency of his own. We were collaborating as vendors, and then I was being introduced to equity crowdfunding by John Stid of Dealmaker. That all converged on one project, and I was given my first equity crowdfunding landing page project. I brought Devin in, and then we had great success off that project. The client loved us. He actually, I think, wanted to hire us like inside of the actual team as the core operating team. Had to pass on that, but it was a nice gesture. And Devin and I ended up working together more formally after that. I asked him to join Market Chemistry and to build out a full fundraising service. And fast forward to today, we have been running Market Chemistry with full service fundraising and then the investor readiness materials for about 5 years now.
Devin, feel like I got a good sense of your background there as well too. Anything to add?
I'll just say my career has always been about helping startups and smaller businesses get their ideas, whether it's to market. And then meeting Cate, I saw the opportunity for doing that in the fundraising space. And because we're combining like Cate mentioned, the storytelling with the operations of the business and then bringing that together into something that actually helps companies survive and thrive is really what got me very excited about working in this space.
Love how you bring up storytelling. And Cate, how you mention this is what the CEOs were really good at, and aspects of that in the product, and then how that showed up in the deck and what pieces were missing, weren't captivating enough for the audience to actually move forward and really get into that tear sheet, really get into everything to complete their investment. What goes into your investor readiness process, your CEO executive readiness process, and what steps do you take before you really dive into a good pitch deck?
One thing that we're focused on, especially over the last few years, is on being the operating layer for all of the founders that are running their raise. So we operate the raise so that way they can focus on the rest of the business. And like Cate said in the earlier part of the podcast, one of the things are that a founder can give a very compelling story to you over whether it's speaking to in person or they're doing it with their team, but then they struggle with taking that vision and translating that conviction that they have and why they created the business and then building that into the materials. So as part of the process, we are working on helping them develop the narrative in the way that makes sense. Of course, like you also do with your agency, you understand very well what the investors are looking for. And especially in a retail space, if someone's investing hundreds of dollars, they have a different temperament than someone who is investing tens or hundreds of thousands of dollars or millions of dollars in like venture capital. But we're finding that even though someone might be investing $250, we are finding that they're more discerning. So we focus on building in a process that takes them through and captures that excitement and brings their subject matter expertise of the business, translates it into a context that's helpful for the investor, and then moving through a process that makes it less of a drain on them to have to worry about exactly how to word things. And we find that especially from looking over the best performing campaigns that we've worked on and studying across the market of all the other raises that happen, the founder should never be removed from the raise, but they shouldn't have to manually operate every piece of it alone. And a big part of that is actually the readiness to get started with the raise. And so that's really important for us to hit.
And I'll also add on to that. One of the very early comments we got about a part of our process still sticks with me today. So there was this company who they make a healthy version of Uncrustables, and great founders, super nice people. I heard from them that when they did our onboarding, where they had very specific defined sections, they filled out all of their traction, all of their partnerships, financials about the company, etc. When they organized that all onto one sheet, because they were a seed stage company, and this was their real first round, they were like, wow, even though I was just collecting raw information, this is the first time that I've seen things about my business as not just chaos and operations, but just in a sequence on a page. So before we even turned it into a pitch page or something to reach out to investors with, it was a piece of organization that a lot of early stage founders aren't even really thinking about, is grouping what's going on, what's happened, and what they're planning in the future of the business into one entire document.
I've heard similar feedback from founders, from CEOs about having it all in one spot and how it tells a different story than in some of the conversations they've had with prospects, which really focus just on the product. What key areas have you found move the needle the most for investors? You're having all this information compiled. Is it the team? Is it their numbers, their valuation, their equity? Is it their social proof, third-party validation? Just to name a few and start the conversation. Numbers and metrics around their growth. What really inspires the most action?
I think that the most important things will certainly vary by industry. Like, you're not going to be talking about MRR in certain industries, for example. But you have to remember when you're talking about crowdfunding specifically, that these are just everyday people. And so They want to see in plain, simple language the awesome mission and vision of the story, the very capable team backing that, making it happen, and then what has been done so far and what their money will go towards. Those are like really the core 4 pieces to the message. And then from there, you have to look at your industry. For example, are you building a social media app? You probably need some social proof. Are you building B2B software? Maybe your partnerships or your monthly recurring is important there.
Love how you break it down and state, by industry. I like to look at it as conversations that the team is currently having with investors or have historically. Were those moments where the audience, their eyes open up a bit more, that they're more excited. It's really getting them interested in moving forward and making sure that's encapsulated on the page. I like how you break down right away the team and the mission, that story. I find that to be a missing piece with some of the verticals I speak to. I could tell you the real estate industry, it's more focused on some of the numbers, and not all of them great stories with some funds and some groups and some REITs in that space. There's others that, could spend too much time there. It's really a balance of all the areas, right? If there's one piece lacking, or I wish I had more information here, that could be just enough to have an investor close that deck PDF or hop off of that offering page.
The crowd seems like more so these days, they are almost operating on a hive mindset also, which is the more traction that it seems to get. And of course, it doesn't answer the entire question, but something that we've noticed a lot is if there is already popular sentiment, then even with an industry, it helps it to really accelerate. For example, one of our recent success stories is around a hardware startup that is working in AI/hardware. And hardware typically is a very difficult space because it requires a lot of upfront investment and money before there's really any return. But because of the promises of AI, and it looks different than some other things that over the past 2 years, even the sentiment towards a general AI software product has really changed because the investors are wanting to see that this isn't just going to be another GPT wrapper, or if you will, how is it different? So this type of a hardware AI play was enough to break away from the noise, and then also see that understanding that crowdfunding also will operate on a general retail space. So I'll use Robinhood as the trading platform of example here for like someone who would go on their phone between a lunch break and make a small investment in like SpaceX or something. Maybe they buy one share for $100. The type of idea that they hear about something from someone else and they immediately go invest. I think that psychological advantage is something that we look to recreate in our campaigns as well, where if we can ride off of some sort of a sentiment that's already existing in the market, emphasizing that in the messaging, it can really get investors interested in the deal. It doesn't help so much because you can't change the vertical of the business, but we look for these social signals that also help us outside of the obvious things that you can tweak, which are the audience of who you're targeting with investors and the specific messaging. And so that's really helped us because ultimately fundraising has turned into a multi-channel market development process that takes a lot more time to execute over time.
Multiple touch points, multiple visits from those prospects. I love how you highlighted the crowd and the crowd effect there. Social dynamics, right? The empty restaurant versus the place with the line around the block. And you may not even understand what their product is. Just the popularity speaks volumes to you. We see it happen in the public markets and with the Robinhood investors, and take your pick of cryptocurrency exchange investors, token holders, however you want to state it. Very much true on Reg CF and Regulation A plus campaigns. It's definitely a major advantage if in advertising copy we're able to state, over 1,000 investors for some deals, over 70,000 investors, over 20,000 investors, over $1 million raised, 5 million, 10 million, 50 million, whatever it looks like for that deal. but there's a validator there. There's signals that you're talking about. Absolutely social proof and publishers and podcasters and as featured by and investor testimonials and partner testimonials. I like to say the more social proof, the better. How else do you guys demonstrate and showcase that crowd effect, that there is a line around the block, and that this is actually trending? It's one of the top 10% of issuers that really get all of the investments.
I think it's really important that we see that every founder will have their form of a warm network, and besides the signals that they see on the page, it's really important for us to deploy that in stages, and we think of it in 3 rings. The smallest ring being the warm network that the investor is already known by the founder, and vice versa. And the second ring is what we bring to the table with our campaigns is a investor network that we own and maintain. And over the years, we've built a 250,000 investor database that we reach out to on behalf of the founders that we work with. And then we're able to get them in front of known investors. Then it allows us to drive the traction into the further out ring. And like some of these channel roles include LinkedIn, which is really good for credibility. So it's a good way to signal that if someone's going to do research on the company, if they're going to understand what conversations are going on around the brand, then we're able to center it there. And then on email, it allows us to access the audiences that already exist for the founder. And in some cases, we're able to leverage customer lists and other things that they get. Not so much on cold email, I think around because some founders will say, hey, I'm going to buy this list from ZoomInfo or something like this. And we had someone come to us with a 48,000, you're laughing because I know this you get asked this a lot. 48,000 veterans. We got a list of 48,000 veterans for a really cool software AR product. And we tried it just to say, let's give it a shot 2 years ago. And it just was nearly net zero. So cold lists are really challenging. And then, of course, if you're working with a platform, in the case of crowdfunding, investor updates, reactivating those groups, and then you mentioned partnerships and social content helps to reinforce. Then, Jason, I know your team has the paid acquisition side at a really big scale. So our lens is that the direct relationship with founders to the investors is really important. And that operating layer to go alongside it for then when they're ready to take on a paid traffic campaign, because then that really helps them create that coordinated system, because it's really about what all of this stuff working together. And even though it sounds overwhelming, the strongest campaigns are not just dependent on a single channel anymore.
So I'll also say that thinking through how to create social proof from the original basis of market chemistry, which would be copywriting and narrative, we apply that to campaigns as well. So when I look at what a company has accomplished, or even drawing that out of a founder, I think through hilariously 3 principles I learned in school, which are Pathos, ethos, and logos. And I'm constantly saying those words to Devin, so that's why he's smiling right now. So Pathos is appeal to emotion, ethos is appeal to authority, and logos is appeal to logic. And when you think about a company and what it's achieved, especially in the crowdfunding space, the crowd can get behind all 3 of those. So I talk to founders when they're like, well, we don't have revenue yet, so why would anyone care about what we're doing? It's like, maybe you don't have revenue, but you have, hundreds of 5-star reviews. That would be logos. And maybe, Pathos and logos, actually, because that is definitely something people had an emotional reaction to. And it's also a logical number. Like, you have achieved a bunch of happy users. And then when you look at the ethos side, that's something that I ask about all campaigns. So yeah, the easiest thing to go through is asking, is there some big name that can carry the crowd towards you? So is it Y Combinator? Is it you're part of the NVIDIA Inception program? No matter what it is, there's usually something about a company and what it's accomplished so far, even if it's not on market, that can pull people towards it and interest people and show proof to a large amount of people.
That proof is so important. We don't believe what we see online, skeptical on new investment opportunities. I'm going to be quoting you on how you broke that down. I think that's amazing. Being able to speak to the emotions, being able to speak to authority, speak to logic. Got to make sure I'm pronouncing the ethos, pathos, logos right. But I'm breaking that down because I look at creative, and this is easier to do with advertising, as a set of variants, testing, word I say a lot, of course, and then letting the data show us what's working. So if there's ads that we're testing that are specifically around emotional draw, or being able to point at those validators and authoritative ones which really matter, really changes perspective and the lens that a prospect would have. I notice it even in the way that they speak to their peers of, Forbes says they're going to be the fastest growing hardware company, or whatever it may be. They're literally quoting what others have said, that others to others conversation, and then creative more around the logic. So really like how you broke that down.
And you have to remember the thing about crowd effect too, is you don't have to think through the lens of fundraising at all. So think about when you watch the news, for example, and then you hear grandma parroting talking points from whatever news station. It's because she remembered what was told to her. And in the same way, you can apply that repetition and sharing a message in the crowdfunding or fundraising space. If you really distill your message to something that's clear, easy, repeatable, and catchy to other people, they will pick it up.
And then what I love about digital is being able to do it at more scale. So whether it's more LinkedIn content, more partners putting out that LinkedIn content, more efforts to grow that inbound email audience. Devin, thank you for pointing out the cold email versus, warm email approach. I've been in conversations with even, different investment banks and, VCs for years about why advertising is needed, why investors will actually click on ads, and how cold email outreach is not the answer. It can be tested, but wouldn't put too many eggs in that basket. The updates, all of these are really the foundation, even before putting cold ad traffic, even if it's warm, similar to your proven network of investors or any known investors. You want to make sure your warm audience is converting the most. I was on a panel and someone said, if your mom won't invest in you, why would I? These Reg CF, Regulation A Plus campaigns, a lot of them have really low minimums, relatively speaking, $1,000 less, some of them are $100, $500. So you should be able to have some people in your first green network come on board just to support. And I find many founders are hesitant towards that. Either they don't want to make themselves so their brand look weak, or they feel they've exhausted their network or something along those lines. I find there's always more capital in those lists, in those audiences. And if you're able to start with some initial crowd, it's easier to get that larger crowd effect. If you're surpassing 100K more, right out of the gate versus taking an audience to a page that has $8,000 raised or even $80,000 raised, the listening and therefore the projections are much different.
Yeah, and I'm also, it brings to mind to me there's different aspects to this, but there are founders who are very impressive. We have, for example, one that we're working with now he's an Ivy League graduate, very accomplished speaker. He is just, anytime we introduce him to someone, they're just happy to speak with him. He's very apprehensive about promoting himself to his own network, where we've been going in circles with him for months saying the biggest ROI that you can have in your campaign at this stage is to spend your energy talking to people that you know. And I think that's why founders tend to underestimate fundraising in two ways. One is they see it as a relationship problem, which then they hire someone to do outreach for them, someone to do paid ads in the case of your agency, Jason. And then they see it as an operating problem. Like, how do I actually get this done? How do I handle all the questions and things like that? But we're seeing also the relationship between the work that's being done on our side. We have a case where we were working with a client that they had some ads they were running for the course of 2 months. They hired us to come in towards the end of the campaign. We nearly immediately got them a $10,000 investor that came in through the channel because they were excited. They had all of the signals I mentioned before, the crowd was in their favor and also the sentiment. However, on the chopping block were paid ads. And the reason is they said, well, this is not working. We're not seeing ROI from the paid ads. And we told them, wait on stopping anything because all of this is participating in the system. And you mentioned warm ads versus cold ads. So there's also a misunderstanding, I think, across the board that would be good to settle as we zoom out and talk about industry, is that it's not just about what our agency or your agency can do for a single company that's raising, but also is about the fact that this is really a wider system that needs to cooperate better with the whole process. Otherwise, our work is at jeopardy too, because even if we reach out to an investor and they have been primed with they've been receiving Jason's ads for 3 weeks, and we reach out to them for the first time. So we've done our work first time, boom, we get a conversion. Who's attributed to the conversion? We both have cooperated, but because this is, even if we were also running the ads for the client, it becomes a question of like, well, ads aren't working and the outreach is working, and that's not the case. So I think that tends to be a really big misunderstanding and failing to understand how the campaign really works.
Attribution, analytics, perfect area to have misunderstandings around. Those who aren't familiar with advertising or marketing channels may look at it as black and white. What's my return on ad spend? Or maybe broader, which is a healthier look, but then it's tougher to really narrow down what needs to be ramped up and scaled for more performance of marketing efficiency ratio, how much is being spent, how much is being raised. I would tell you the world of advertising tracking has always been more of a game of storytelling than an exact science. I could tell you different types of devices and ad blockers and scenarios where the analytics are going to be plain wrong. Conversion windows, first click, last click, so many different factors to this. When we're looking at an ad campaign and the first party analytics from an ad platform, let's say it's Meta or Google, we'll stick on Meta. That is a tough one these days. Post 2021, iOS 14.5 updates, they're modeled conversions. They were tracking, basically 1 day view through, 7-day click through. Someone views an ad, converts that day. Someone clicks an ad within 7 days, converts. If that doesn't occur, it's not showing up. You could actually change it to 28-day click through as well too, but you have to do that manually, and that's not accepted by all marketing communities. This gets a little nerdy, but I spend a lot of time in this discussion because it's investments into advertising that, if understood properly, lead to more traffic, more investments for the deal itself. But I could tell you Meta needs opt-in to track a user who has not told them that they could track them off app. I don't allow Meta to track me off app. The majority of people don't. I remember seeing a stat of less than 5% do allow them. So they started using these modeled conversions, which skews things completely because then you don't know exactly what's occurring. It is not set in stone, the numbers you're receiving from Meta. I know groups that will use platforms and attribute the conversion to the ad channel, the marketing channel, the outreach channel that started the investment process. So once someone gets to the offering page and puts in their information, not completing the investment, just name information. I know groups that only go off the tracking windows. We already know if it's past that 7-day click, it's not showing up on Meta. I've always looked at it, at least past 10 years plus, as a user journey, and it's going to be 7 touch points or more. And the more channels, although you mentioned multi-channel approach. making it tougher. I also think it makes it easier for a prospective investor to have confidence in what a group's doing. If they're reading about them with the publisher, if they keep seeing their ads, which many times they'll refer to later as just kept seeing you online, kept seeing them online, if they receive one of your emails, if they receive the company's email and they sign up for a webinar and then they convert, fantastic. Does the channel that produced the last click or the first or whatever, deserve a trophy or, added recognition? Shouldn't be commission if that's selling to broker dealers. No, what I find and what I tell clients and do this type of educational conversation is you want to be able to identify the key drivers and replicate. Tougher to do if it's a article, third party doing it organically. More straightforward with email outreach and with advertising and channels that are built to be able to increase volumes. But then the ultimate test is what comes next, meaning did that increase the level of performance? If so, let it ride, keep it going, watch it closely, but really lean into it. And I would say even aggressively if you're getting a very strong return on that, if that cost of capital is favorable, and oftentimes it improves from there even more. But there are vanity metrics, there are groups that try to overclaim and a lot of misunderstandings around it. And it's really a shame if they shut it off early and don't understand it's going to be multiple touch points and that the results will likely get stronger, particularly as there's closing messaging and a fear of missing out.
Yeah, and I was in a few careers prior, over a decade ago, I went through formal Sandler training. If you've ever done that, and the one of the techniques that I remember, and this could have been through like a network of us that were just going through it, but we had this technique that we used called rolling thunder. And it was when you had a client or a prospect that was not responding to you or you wanted their response, you would use the time scale of how many times you would reach out to them. And then the least they responded, you would send more emails. And, if they don't respond, then once a week you send an email, then twice a week, then 3 times a week, then you call them and email them, then you call them, text them and email them. It sounds crazy, but it creates this rolling thunder effect that they have no chance but other choice other than to respond. And the case of a crowdfunding raise, and the reason why the paid traffic works so well with the direct outreach protocol that we run is that it gives us a process that we can show up everywhere. And from a psychological standpoint, if you ask, and we have asked investors, where did you first hear about the campaign? Even if we have data to show that they already received an ad first, they already got an email from us because they were a prior customer. Sometimes they don't even know that they were a customer of the company that is raising the capital and they still invested. So there's this disconnect there. But at the very end, we went through this process of allowing it all to happen in a way that got their attention. And then the name of the company was everywhere. Everybody's talking about this investment because we're able to follow them around the internet. And then we're reaching out to them on LinkedIn from the founder. And then in cases where it doesn't work out, a few things that we really focus on is using the rejection data as diagnostics. So taking the separating different things that come out, because when we call it the difference between quantitative data, which is something, Jason, I think you do very well at, is getting mass appeal to the campaign. We work on the qualifying data, which is what are the investors saying back? Because we're initiating those conversations, it's two-way. And oftentimes we can get that feedback. So we know maybe there's timing issues. We've heard a lot of, I can't deploy capital right now, or I've already deployed that, or it's not quite what I invest in. Maybe there's a misunderstanding. They could tell us, hey, I went to the page. It doesn't look like you have a lot of traction. Maybe the positioning isn't working well, so they don't even understand what the company does. So this allows us to improve the targeting. Mike, you mentioned with ads, it also helps with variance because I'm sure you get the same type of feedback. You have people that go to the page, other different parts of lead capture. So it's really important to look at the rejection data as a way to make the campaign better, even if it doesn't produce capital. And I think that's something that's often overlooked.
And what we look at the most is three levers, which is message, audience, and offer. So when Devin's talking about rejection data, and then also what people write or say in response to just before they make an investment or even after on the crowdfunding page, maybe they left a comment with their investment, all of that info feeds back into those three levers of the message, the audience, and the offer, and allows us to improve and regularly look at what are we saying, what are we doing, and how is the company coming across, and tweak and optimize along the way.
Tweak and optimize along the way, improve everything you guys are saying about getting a better level of result over time. I can't agree with enough. And I really want to emphasize that and highlight it. I've said in different content pieces, so not just a compliment, but it is, and in a true one, I look at marketing talent not along the lines of, hey, can someone set something up that looks nice? Can they launch a campaign well? What do they do when it's not working? What do they do when it is, but they're seeking a stronger result and to be done at larger levels? And the fact that you focus on that, I think shows, the world. And that's what good campaigns really consist of. They're not one day. They may be quick, 2-3 months. Many are, 6 months, 12 months, Regulation A plus filing. Some of them are 3 years. So the campaign has to evolve. Otherwise, there's creative fatigue from the audience. If you're not looking at the messaging, if you're not looking at new audiences and what's working best, the offer, really admire the qualitative, quantitative breakdown as well too. I actually think there should be a lot more of that in the industry, and something that excites me about you guys and collaboration around that as well too. I think there's these thoughts at times from portals and intermediaries, founders, CEOs of, okay, who is my marketing group? And they're doing everything. I don't want to talk to anyone else. I don't want any outside perspective. Engagement, all of that aside, I would encourage anyone who's running one of these campaigns to get different types of feedback on the creative that they're putting out there on the offering page, things that could be improved. I would definitely be thrilled to see more groups working together. When I look at the stats in the space, I generalize it as the bottom 50% of campaigns are stagnant. The top 10% are receiving all the investments and want to see a higher success rate industry-wide. So why limit the quantitative traffic coming in, to one group? Should be testing as many marketing channels that you're prioritizing, which ones to move forward with, but as many as possible. Because once you're able to crack the code, once you're able to say, if I target these audiences with this message and this offer, we could do a lot more of what's working and at much higher levels. And it's really around that team that's making it all happen. Invite more perspectives, bring in more traffic, see more success.
The thing we're seeing as well is that lower percentage of the bottom percentage of founders that are raising or issuers that are raising capital is that they're operating on a slightly outdated model. They need to be scaling on proof rather than be scaling on hope. And what capital raising taught us 5 or 10 years ago is that it was good enough, if not great, to sit down and say, Jason, Cate, I'm glad you're here today. I'm going to walk through my napkin math on why I'm going to create this $1 million enterprise. And you were both excited and amped up and writing me a $25,000 check each by the end of the meeting. But it doesn't work that way. People nowadays, especially as crowdfunding has become more mature, there's even talks about changing the limits of this, but it's, still has been, it's entering an era now where people want to see that you can execute on something. They want to understand the message that you're sending. It has to be polished. So the requirements to raise capital has gone up. And then a misunderstanding that has happened is that more volume will only amplify what's already happening. So if people are confused as hell about what you're doing, it only amplifies the confusion. If they're investing and things are working well, then boom, Jason and DNA will like 20x that. And that's one thing that we find is we're looking at, this existing network, the high probability investors bringing in our network, and then cohorts and different types of channels and paid traffic is like, if you're just throwing fuel on a fire that's not burning well, you're not going to get much more out of it. And so that's one thing, is the shift has to move towards creating something that actually is operating off of reality. And that's unfortunately what's needed now.
Absolutely. And I've seen groups start at too high of a level of spend. Maybe that's for service fees. Maybe that's for the advertising. I'd say more along the lines of, advertising, it not working, and then the plug being pulled rather quick. We're starting groups at, lower levels, but at the same time, need to continue optimizing till you're seeing a result that you want to buy more of. If you're getting, a 3x, a 10x return on ad spend or marketing efficiency ratio, and you have the ability to do more and you're basing it off that proof, as a CEO, it's going to go a lot further. Same with, investors. If they're seeing proof along what you're doing, I usually see that show up in the results as well too. Feel like I could ask you guys a lot more questions, thoughts on the industry, results, indicators of a campaign that's going to do really well, something I get asked all the time, and I have my approach towards answering that accurately, fairly, without overstating. But want to get into the title of the show, package some actionable insights for listeners, for viewers, based on your expertise, which I admire. What should issuers be testing out towards the success of their crowdfund, their fundraise? Look at growth as a series of tests. It has to be validated, has to be proven before it's anything more than a test, in my perspective. This could be, pre-launch and on the creative or during the campaign. What should they be ensuring is part of their test schedule?
On the testing side, making sure that the founders need to really be thinking about the opportunity, that they can explain it. And it's sort of like a beta test, if you will. I know there's industry terms like testing the waters, but it really is about beta testing the business as far as talking about it for someone who would invest, which is very different than explaining what it is, the product or service that you're offering. And I hear that a lot in the pitches we get when someone comes to us and says, I want to pitch investors, and then they give us their pitch. I think it's a good pitch if I were a buyer of the service or product that they're building, but it's not quite talking to why this is a good investment opportunity. So clearly explaining the business, clearly explaining use of funds, making sure that they can answer difficult questions that come about from the model. I've seen a few issuers get really deflated when it comes to challenges of the model, or is this going to work, or what it's going to be. And so the marketing can't compensate for this. We can't take this type of, if they haven't reached that point, if they haven't had their assets or materials clear enough to be able to reach that, then we can't help them get past that to explain it. It needs to be part of the development. Then the hypothesis around what the business is, why someone should care about it, making sure that they have a realistic idea around the fundamentals. And a lot of times they'll work on that with the platform about the check size that they're looking for, the prior investment behavior that they've seen. And so that helps. But the industry fit is not necessarily investor fit. So we find that that's a really important diagnostic for us to go through.
And adding on to that, what makes a top 1% campaign is usually an audience. So a test with your audience to see if they'd invest or back your company, just something simple like a questionnaire or sending out some early emails to get a conversation going with some of your customers or super users. That's very helpful for gauging if who you have built in is actually going to support you in a meaningful financial way beyond the product that you have.
That extends to, go ahead.
No, please.
I was going to say that like some ideas that I could give is also for the testing, our initial investors, if there are any colleagues that you have, customers, advisors, partners, any shareholders, or people that are advocating in the community. I think even just sitting down and throwing together a Google sheet or a list of those people and actually reaching out to them and having phone calls really does a lot. Even if it's only 20 or 30 people, actually having those conversations really help, because the warm network is really the first ring of the campaign, and it's important.
Closed loop system, not just your imagination or interpretation of what the audience is going to think, actually getting that feedback compliantly, but being able to then use those findings to shape the page, to be able to have an idea on the campaign and what you're going to be doing in different stages. Let's say all of that happens. Getting good feedback from your initial audience, page, everything around the creation, your first channels all go live. Not seeing performance right out of the gate. What are the best tactics at that point to optimize and manage to a point of effectiveness?
Biggest thing to look at is looking at the funnel itself. So we have there's some point in this process that's broken. We don't quite know exactly what it is, but the difficult thing when you have a crowdfunding campaign or even a Reg A campaign is that you have different things to look at. So I'll just use the crowdfunding as an example, is that the open rates of messages or emails, or if we're doing LinkedIn outreach, reaching out to those and judging those metrics, understanding the replies. Are people asking to see the page? Are they looking at it? Are they asking for meetings? Are they in the due diligence stage? Are they saying they want to invest, but they're not? And then are they investing? If so, how much? And can that be increased? So looking at the investor movement rather than just the marketing motion, I think like you've mentioned vanity metrics a few times, which are quite often debated in marketing. But I think that there is, especially with the advancements in AI, as an agency, we've been able to do a lot more by analyzing every single conversation, every single open rate per day, all of these things that would take data science teams weeks to do in the past. Now we're able to do this with AI algorithms and really narrow down and understand exactly which replies are getting responses, which are not, and for what reason. We're able to pivot within weeks of a campaign. So these are things that we use to apply to answer your question about what we would do with it, and understand, what kinds of rejections are we getting. I mentioned a few earlier that I won't repeat, but it's really the patterns that we're looking at. If we're getting repeated rejections, if it just seems like it's stagnant, we're going to tweak. Cate mentioned audience message offer. We can't change the offer necessarily because that's really the investment in the business. So it's the audience and the message that are really important to tweak. And those are things that we regularly pull levers on, make changes, track that, and see what's exactly happening because every no gives us an opportunity to make a next campaign decision.
Data-driven decisions. What about once it's working? Cate, you mentioned 1%. That's a tough number to shoot for. Any tips, any examples towards scaling and obtaining that level of success on one of these deals?
So when you were talking about per channel earlier, where people were trying to figure out where the attribution comes from, where does it go, what channel gets credit for what, we zoom out and we're looking at a system level the majority of the time. But when we are because we're trying to optimize for meaningful movement, we're trying to get investments. But when we zoom in to find out what's working, that's when we have to look at all of the numbers in detail. And the goal is to find the thread. So there are usually a few threads in a campaign that's starting to work. And your goal is to duplicate those threads, to pull out more of the thread where you can. So an example would be something we've added to our investor database that we've always wanted to duplicate, from being able from the ad side is like, how do we bring some of the star pieces of the ad side to our investor database? So one thing we did in the past year was actually add a algorithmic lookalike matching system. So yes, we can pull investor contacts that are relevant for the company in the beginning, but then you find out who actually is going to invest out of those investor matches from the beginning. So that 10K investor Devin mentioned from that story earlier, we were able to take that individual and create a lookalike audience in our database of him. So investors who invest at that check size, investors who have invested with him previously on other deals inside of that particular crowdfunding platform, all of those details really matter because you're looking for the thread of who resonates with the raise the most and then attempting to duplicate those with all the tools that you have at hand.
Well said. Well said. So really diving into the analytics, what you can see in terms of what's working, and not just ramping that up, but going deeper and trying to really figure out why that audience, how do we find more of them and be able to go at larger and larger pools accordingly.
Yeah, it's like imagine finding, you can have a theory in the beginning of what is your investor, for lack of better wording, ICP, and that theory needs to find a reality. And your job is to pay attention to what your investor ICP really ends up being.
I can give something as well that is helpful for anyone who has a campaign that would help to mimic similar results with the network they have. So in a campaign, let's say that if you're in a, no matter what, you have the person's name, right? So no matter what kind of campaign, if they've invested and they've gone through doing the paperwork or they've applied on the platform, you have their basic information. If you, for example, look at their publicly available information, whether it's through LinkedIn or some other kind of source, and you look at enough of these, you'll understand who's relevant and why. And so some things that we've seen that were commonalities is it's not simply just the fact that they've invested in a campaign that was similar. We have data as for most of our contacts that allow us to see what they've invested in, but you could download the list of investors from the campaign and you can do a deep analysis of all of the investments that have come in. There's always a percentage of people that are statistically irrelevant because they're friends and family. I talked to Jason and Cate over the pod and they invested. They're not relevant because they saw me and they have, maybe they believe in me. We're talking about people that find out about it. I think actually in your case, Jason, could end up being really powerful as well, because if you analyze those people, we find sometimes it's an industry that they're working in that has nothing directly to do with the investment. It is just that maybe they're a computer scientist and then an AI application really interests them because that's interesting to someone who's in a computer science-based field. So we're able to find and test these hypotheses that are not direct matches. They can be adjacent, but because we have enough of that information, we're able to take that and then use it. So this is what I mean about what's really powerful and exciting about fundraising now at scale is to use the data to not just contact more people, but add more of these validated audiences, messaging, channel, and then operating capacity and allowing the quality of the investor relationship to increase.
Just a quick aside, when Tesla dropped their first car, they did not go selling to car guys. So that's something that you think I'm selling a car and I'm selling a very unique car. I should go out to people who love cars first and see what they think about it. They were selling to wealthy individuals who were interested in the cutting edge of tech, and that can be all sorts of industries. But that targeting was done that way because they dropped an extremely high-end car first, and it was an electric, which really wasn't a popular vehicle type at the time. So think of your investment in the same way. What are the outliers of your business? Like when you think about your customers, when you think about the friends and family you were able to get to invest in the first place, are there any common threads that we can start with as our hypothesis for what to duplicate in the beginning? Even if you're not working with a team who's able to, tap into a huge database or do all of your marketing for you, you do have the ability to look at who's around you, all the conversations you've had, who's been excited, genuinely excited about your product or your service, and take that as your starting hypothesis and test it.
And what I'm hearing, and I mean something similar, is cast a wide enough net or have enough variance so that you can identify these outliers and do more of what's working from there. Make those data-driven decisions, but all based on evidence.
Yeah, probably the
Go ahead.
Probably the biggest issue that we see, which can be, to be candid, we don't always talk about the campaigns that don't do well and they just don't make it across, they get to a certain point, but there is a population of raises that will go through the process of being ran in a year, that they don't make it to a level where we have statistical significance around the data we've captured. That's probably the worst case. There are some raises where we got a lot of movement, but not a lot of momentum or motion on the raise. And so those are difficult, but it's easier to tell the founder, look, we could show you 150 investor conversations that we've had in your accounts that you can verify, and the raise is not moving. In the other case where we can't get that traction, I think it's like the most upsetting for Cate and I, because that's where we can't optimize something that we're not properly able to test. And sometimes no matter what you change, that third factor, which is the offer, is not movable. And sometimes the raise is either bad timing or a bad offer.
And on the offer, I will say to all founders, please do not assume that because you are going out to the everyday person when you're doing a crowdfunding campaign, that means that those people should get a bad deal. So if you are, just treat those people like they were professional investors when you are putting together your valuation and the terms for the deal. We see a lot of the bottom raises honestly flop because even though the everyday person isn't achieving some insane investment education level, we all have access to the internet and we all have access to the Form C, which has all the details behind the company. And it's a very easy smokescreen to see through when you have a very overinflated valuation. You've barely done anything with the company yet, and it's really not fair to ask people to participate in a deal that maybe you yourself wouldn't invest in or wouldn't ask a professional investor to invest in.
And I learned from growing a 6,000 investor and connector group in Austin. It took us about 4 years to do it. But that group, it gave me so much more credibility locally in our city, and it allowed us to, we turned it into an events business, which wasn't related to raising any capital. But if I ever wanted to raise capital for something, I have an audience that I could do that with. And so some of these founders, I would also, if they're listening to your pod, could also to say them, they may need to go to a step where they should, if they don't have a lot of traction with the business, if they're at a stage where they're not quite ready, is to spend some time building that. And fundraising works really well in that case as well when you're building a network, even if it's not crowdfunding, knowing and getting connected. I think a lot of people want to try to shortcut or pay for a solution that'll fix that. But you can't optimize for trust. You have to build that.
Can't optimize for trust. Isn't that the truth? And everyone could be building an audience more than they have now and early that can be used later. Cate, you mentioned how important the audience is earlier. It's the first thing I ask a prospective issuer. How large is your audience? Email, social. That's projector can get an idea of the foundation and trajectory accordingly. I work on these campaigns all day long. I've got a whole page of notes here. Feel like streamlined educational flow there. So want to begin wrapping up the episode by first of all saying thank you. I can see why you guys are so good at what you do and how that shows up in the results for your clients, and what that readiness, preparation, looking at the valuation, making sure it's fair and sets a good stage for you for the next round and for a liquidity event that's realistic and you don't have to go backwards, making sure the messaging is there and then it's approved and you're getting the right feedback from your audiences, what to do on the offering page and what to point at that's evidence-based, and all the different working mechanisms to optimize and really ramp it up to the next levels and base it on that data that you're seeing all the way through. So, and you mentioned some campaigns don't work. I feel like I learned the most from those. It sounds like whether it's the winning campaigns, the losing campaigns, you guys are never settling with the level of performance that you get. You're always looking to win at higher levels from there.
Absolutely. And I think what one of our advantages is that we build founder-centered and system-supported raises, that we help them to take care of those things, but not necessarily we don't believe that having a founder delegate the entire fundraising process is the solution. The best raises that we work on, the founder's in there taking punches and throwing jabs and hooks with us, and we're both in the trenches. And that's really where things have happened. And so for anyone that's listening, you can connect with us, Cate and I, on LinkedIn. Also, you can visit our website at marketchemistry.com. It's spelled MKT chemistry.com. And we also have an email newsletter. You can stay updated on Cate's Wearing the Hat, Community Capital Club. And you can also get a link to that on our website in the footer.
Awesome. Cate, any final words you want to leave us with here today?
Appreciate you having us on the pod. And I'm looking forward to working with DNA quite a bit in the future. I would be remiss if I didn't share. I realize I never said anything about our historical performance as a company. So I'll just wrap up by saying we've done just under 80 raises now, and we've raised over $225 million. So I am very happy with the progress so far, and we hope to keep working with founders. You guys are the reason we're doing what we're doing, because these companies build the backbone of the US, Canada. Those are the countries we work with. And honestly, it's super exciting stuff. Never a dull day.
I can absolutely align with that. And knowing the averages of CF and A+ campaigns, your numbers are huge. Want to make sure the audience understands that. Those are very successful rounds. Cate, Devin, thank you so much for taking the time to do this. Can't tell you how much I appreciate it. And thank you everybody for tuning in. We'll see you next time. Take care.